Hello, everyone. I'm Andy, and we are going to analyze two new stocks today. Basically, Morgan Stanley and Johnson and Johnson. It's specifically interesting to analyze these two companies because today Morgan Stanley had their profit out and they beat the estimates quite well. I mean, that was in line with our estimation. Yesterday, Goldman Sachs also showed great profit margin, and that means the banking sector totally ripped through the profit margin as far as the first quarter was concerned. Now, Morgan Stanley's first quarter profit beat estimates on Tuesday, fueled by a resurgence in investment banking led by equity underwriting, where revenue more than doubled, sending its shares 2.7% up. And as a result of strong net new asset growth, the firm has reached $7 trillion of client assets across wealth and investment management, guys. And the Wall Street giant reported profit of $2.02 per share, sailing past analyst average estimate of $1.66, according to LSEG data. So its total revenue rose to $15.14 billion compared with $14 billion. So where does that lead us? Let's take a look at the company. You can basically look at this company in two different perspectives. Post 2009, all the way until 2020, let's say the COVID crisis, and then post COVID crisis, I would say after 2020, sell off of the stocks all the way until today. And if you look at the company, we've been pretty much acting like a blue chip stock, guys. You see a constant growth since 2009. Don't forget the banking sector had dramatic amount of pressure post 2009, the 2008 crisis. However, they capitalized on that profit in 2020, and they basically create a momentum from that point in time. Now, if you are so the question is, should we invest in this company for short term, or what could be a good horizon? If your horizon is a 10-year horizon, absolutely. The current price of despite the 2-point-something% surge in the stock price today, the market has not been open here in Germany yet, as I'm right now as I'm recording this video. But so if you basically want to keep the stock for the next 8 to 10 years, it's definitely a good company. It has good fundamentals. We can just go through the fundamentals. Quite impressive. I mean, the fundamental, what they showed us last year, the last quarter, was quite solid. Net profit margin 15% on good earnings. Don't forget, this is also because of the interest rate hikes. And as you know, with the interest rate cuts, banks are generally going to go under a dramatic amount of pressure. They pay a 3.9% dividend yield, which is quite substantial, I would say, for a company at this size. And the only thing that is quite disappointing and maybe to a certain extent scary is if you look at their debt to equity analysis, where you see with their growth the growth rate has actually brought about a dramatic amount of debt. So, which is again in the banking wealth fund management and banking sector is quite normal to have such high amount of debt. However, don't forget, if we go for a longer period in terms of keeping the interest rates at high levels as we have right now, you're going to be having some problems with such banks. Having said that, I recommend the company for long-term investments. Short-term, long-term, the current price is quite well. Short-term investments, I think you are not getting a big value out of this company as the growth is sluggish. Looking at the technicals, we are right now, this is, by the way, it's a long-term chart, but we are right now at a very crucial pivotal point. Well, when the stock opens, I think you're going to see a 2.3% rise. So you're going to be landing somewhere around here, basically the 92 marker, 91 marker, which is still within the range. I think a very, very big sort of resistance line for them would be the $106 margin. It's not so easy for them to move past that. However, I think now they have a very solid support line around $74. So if you got this company, be almost sure that this will be the next 2 years support line, I think. Unless we go through some kind of crazy news or some kind of crazy war with this company. So we are right now neutral on the company. The next company we're going to analyze, guys, is J&J, Johnson & Johnson. As you know, the market has not been very friendly with the pharmaceuticals. Johnson & Johnson, basically they reported their first quarter profit, and even though it was above Wall Street estimates, they had great sales, and their cancer drugs, including top-selling blood cancer treatment, was, Darzalex, I think is the name, was very, very successful. On adjusted basis, J&J earned 2.71 shares, so $2.71 per share the first quarter, compared to the analysis estimates of 2.64. As you can see, most of these companies have been returning with good profits from the first quarter, from the fourth quarter last year, so they have started the new year quite well. The company reported total revenue of $21.38 billion compared to the estimation of $21.40, so they kind of disappointed there, which was not really significant. And now they expect their adjusted operating profit per share between $10.60 and $10.75 for 2024, which is basically a higher estimate compared to their previous $10.55. So having said that, even though if you look at the news that came out today, they seem to be quite solid, and the company seemed to be doing pretty well. However, if you really look at the chart here, guys, it has a lot to tell you. Now, I was just looking at the fundamentals of the company. Well, they have really solid business plan. However, a couple of things really sticks out and makes me a bit, hesitant about the company. So the past earnings growth analysis, one of their biggest problems is, just compare the company's growth to the market, okay, or the industry. They've been performing negatively. This is the past 5 years annual earnings growth as opposed to the market, and this is basically the last year earnings growth. Okay, the market has been really performing horribly. That's a fact. But the company has been even underperforming that horrible market. And if you look at their earnings trend, their earnings have declined by 0.6% per year over the past 5 years, and their growth has also been negative. So they have not been able to maintain constant growth. And don't forget, money was cheap for J&J for almost a decade. I think that's the time that they had their great time. Historically. Now, what makes me happy actually looking at the company is that their debt to equity ratio is quite well. The debt is more or less under control, which for a pharmaceutical company is good news. But now let's take a look at their short-term hourly chart as far as their trend is concerned. We see something very interesting, guys. Well, the MACD has been signaling a bullish trend. However, the general trend of the chart is bearish. We just broke we tried to hit for this 149 level, for $148 level, which was rejected. We went down. Now we're under Bollinger Band. We are under the trend. That means we're going to keep this channel as far as the trend is concerned. this bigger channel is starting from 162 right now at 147. But the good news is we're going to be sitting, I think a good stopping point would be the 145 in the short term, and longer term 139. If you look at the longer chart now, the bigger range, you will see same story. The company has been a blue chip with a constant growth. However, that channel, if you look at this channel has been cut out with this sell-off here, and now we're creating a new channel right there, and as long as we're within this channel, we're not going to be able to continue that general trend. What does that mean for you guys? That means as long as we can keep the 143 long term, I'm talking about $143 line, you're safe, you're good to go. You can stay in this chart, and maybe it's a hold position right now. But the minute you're under that, then you confirm this downtrend bearish chart, and you should be worrying for 126, because if they can keep the $126 level, perhaps they can have a rebound and then come back up again. I see the future not so easy for Johnson & Johnson. I would not go into this company just now. I want to see consolidation around this area, the 140 something, $143 area, and then potentially continue, buying my first portion into the J&J chart. All right, guys, those are the two companies I wanted to analyze for today. Thank you very much for your time and for listening. Please don't forget to like and subscribe and share the video with people who you think need help to learn a little bit about the analysis of the stocks. And hopefully the content is helpful to you. Have a wonderful day and talk to you soon.